G7 leaders have officially agreed to explore ways to cap the price of Russian oil and gas, which led to a further rise in oil prices. Notably, any attempt to regulate prices for any product inevitably leads to its deficit. This is a major concern for many states, which will now try to create additional oil reserves. Oil is actually the lifeblood of the modern economy. Its shortage will result in economic catastrophe. Moreover, if Western countries are able to develop some effective price cap mechanism on Russian energy, the entire market will immediately come under price pressure. Thus, other oil-producing countries might be tempted to create artificial shortages and reduce output. Against this background, oil prices have no choice but to advance. In the near future, prices may well rise above $120 per barrel again. According to the trading chart, Brent crude oil futures are rapidly recovering from early losses incurred during the recent corrective move. The asset has already gained over 10%. Now, buyers are expected to face an important mirror level of $120 per barrel, which may well cause a decrease in the volume of long positions. The risk of a shortage of oil on which the global economy depends reduces the appeal of various safe haven assets. In this situation, gold is of no interest. It's much more important to create sufficient oil reserves as soon as possible and by any means necessary. As a result, investors are fleeing from safe haven instruments, including gold, and peeling into the energy market, thereby further limiting the upside potential of the yellow metal. Gold futures keep trading downwards, drifting around $1,820. If the price fixes below this level in the 4-hour chart, sellers will have every chance of breaking through the 1,800 mark and dragging the price further down. Otherwise, the market may see another rebound. Now let's consider the situation with the Russian currency. Last week, the ruble repeatedly attempted to fall below the mark of 52 rubles per dollar, but failed. And the outcome of the G7 summit led to a market shift to the level of 52 rubles. To some extent, panic energy demand growth boosted demand for the ruble. After all, Russia is the world's largest energy supplier. Besides a continued rally in the value of the ruble, was contributed to by the decision of the Ministry of Economic Development to switch export duties on fertilizers and agricultural products to rubles. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.